From the studios of Farm Journal Broadcast, this is Ag Day.
The market for U.S. ag in Morocco.
We have been using U.S. soybean meal, a product that is known for its quality, for reliability.
AgDay's Michelle Rook travels to the country with U.S. farmers to see the role U.S. soybeans have to play. As we get more good news about U.S. ag exports, especially dairy.
In terms of value, it's a record. And in terms of volume, it's a record.
And could the GMO corn battle with Mexico finally be coming to an end?
They really rely on us for ag, not only pork and beef, but corn as well.
An update on the negotiations right now on Ag Day. Good morning, I'm Clinton Griffiths. There may finally be a diplomatic solution that will end Mexico's plan to ban U.S. GMO corn. There are reports Mexico will soon publish a new decree that will keep U.S. corn exports flowing into the country. AgDay's Michelle Rook joins us with the details.
Clinton, Mexico's Secretary of Economy now states that if the Federal Commission for Protection Against Sanitary Risks determines U.S. GMO corn is not a threat to human health, it will have no problem entering Mexico. The new decree coming in the next few days will address U.S. concerns and should eliminate the possibility of the U.S. starting a dispute settlement process against Mexico under the U.S.-Mexico-Canada agreement. The U.S. ag industry is hopeful this will resolve the trade dispute because it could impact U.S. ag exports of not just corn, but a host of other products, including beef and pork. This would be devastating, with Mexico the top customer for U.S. pork this last year by volume and a big export destination for U.S. beef and cattle as well. Officials with the U.S. Meat Export Federation say they are keeping their eyes on the outcome and have considered it a possible threat to meat exports.
We're very aligned as an industry. I mean, corn producers are big customers of the pig industry, and it's all, the supply chain is all connected. So yeah, we're hopeful that the USTR can work something out in a very equitable way with Mexico.
He says the U.S. and Mexico have had a long-standing trade relationship that goes back to NAFTA, and it's one that is mutually beneficial.
I think Mexico, personally, I think Mexico is pretty reasonable. And there's political positioning, and then there's the real world. Hopefully they can work something out to the benefit of all, because they really rely on us for ag, not only pork and beef, but corn as well.
As a result, Hallstrom is optimistic the two countries will get something worked out, and he's hopeful about the announced decree. Now, as we reported earlier, U.S. Trade Representative Catherine Tai threatened Mexico during their last meeting that the U.S. could take Mexico to task through the USMCA dispute settlement panel if they move forward with plans to ban GMO corn by 2024. Remember, the U.S. has already successfully taken action against Canada on dairy, so there is already a precedent.
All right, thanks, Michelle. And more good news on the export front. U.S. exports for 2022 had a total value of $196 billion. That's a record high. China continuing to lead the way, seen here in dark blue, purchasing $38.2 billion of U.S. ag product. That's up 16% from 2021. Gains were also seen when it comes to Mexico, Canada, Japan, and South Korea, along with the rest of the world. Now, the U.S. Dairy Export Council also reporting 2022 was a good year for U.S. milk producers. It says exports posted the third straight record year, with sales topping $2.6 billion, including a record export year for butter.
Dairy exports are off the charts. I think we've beat the last record by more than $1 billion. So in terms of value, it's a record. And in terms of volume, it's a record. So we're exporting more, about 18.5, 19% of our overall milk production right now. And that's grown from 16% just a few years ago.
Cheese, whey, and butter leading the charge. Herrick says butter exports were up 40 to 50% compared to previous years. Now, overall, the U.S. trade gap widened to a record high last year. The deficit increased 10.5% to more than $67 billion. And the improvement in farmer sentiment at the end of last year appears to have carried into the new year. That's according to the latest CME Group Purdue University Ag Economy Barometer. The index rising again in January to a reading of 130. That's 4 points above last year and represents an increase that's 34% higher than the 2022 low point last June. Producers also had some interesting things to say about leasing their land for carbon sequestration.
There continues to be a lot of interest in carbon contracting in agriculture. And in the January 23 survey, 9% of the producers in the survey reported having discussions with companies about carbon contracting on their farms. That compares to about 7% of producers who reported the same kind of discussions back in the first quarter of 2021. However, across all of our surveys, just 1% of producers report having actually signed a carbon contract.
Now, surveyors also say producers appear to be entering this year in a strong financial position despite the rise in production costs. USDA is now forecasting net farm income is expected to drop 16% this year. The Economic Research Service putting net farm income at $137 billion. You see that again in blue. That's a drop of $26 billion from last year. Now it says cash receipts from the sale of ag commodities could fall 4.3%, but it also says lower direct government payments and higher production expenses are factors in the decrease. Not snow, but rain is on the way for the Ozarks, and severe weather isn't done quite yet with the Deep South. Meteorologist Andrew Whitmire joins us with the very latest.
And yeah, we will be watching this heavy rain potential here up across the Ozarks and even up into the Deep South and as far north here as southern Illinois and southwestern tier of Indiana for some localized pockets here. Some heavier rain, and looking at the Ozarks, we could be looking at some pockets here of 2 to 4 inches of moisture here on this Wednesday as the slow-moving low-pressure system scoots on by. Severe weather risk still continuing down across the Deep South. We're highlighting in red now the Jackson, New Orleans area for the potential here for a few tornadoes, damaging winds, as well as a flooding potential. And then as we head on into Thursday, we're going to see this severe weather threat shifting its way further off towards the east, towards the Florida Panhandle. Here's a look at the future radar here, and we're going to be watching again this low pressure system beginning to move its way towards the north and east where the cold front is. That's where we have to watch out for some strong storms down across the Deep South. Meanwhile, a heavy rain producer up across parts of the Tennessee and even as far north as the Ohio River Valley. And just in time for the Super Bowl, Anheuser-Busch announcing the birth of 4 new Budweiser Clydesdale. They were born at the home of the Budweiser Clydesdales, Warm Springs Ranch in Boonville, Missouri. The 4 colts are said to be enjoying the brisk winter weather and exploring the grounds of their home. Once fully grown, they stand about 6 feet tall and weigh about 2,000 pounds. Maybe someday they will be future Super Bowl commercial stars. I'll more on your Ag Day forecast in just a few.
Not enough farmers are growing sugar beets in one part of the country, and that's the reason one company says it has to shut down a plant. American Crystal Sugar Company says it's closing its Sidney, Montana plant. It says last year there were only 18,400 acres contracted, and it has become financially unsustainable to continue operating the nearly 100-year-old business. The plant closure will start in April. Growers will receive final payments in November. About 300 workers are employed at that plant. Company officials say this does not affect the beet harvest in North Dakota and Minnesota. Grains were mostly lower on Tuesday ahead of Wednesday's WASDE report. We'll take a closer look at that coming up next. And later, developing a new market for U.S. soybeans takes work. We'll see what's next in Morocco as farmers make the case for American meal in the country.
Ag Day is brought to you by Germinator Closing Wheels. Perfected in conventional, excels in no-till. Order 12 to 16 rows today and qualify for free shipping or 20% off an end zone moisture management package.
Tuesday's market closes were mostly lower in the grains, but we were mixed in the livestock futures. Mark Schultz, North Star Commodity, joins us, and a lot of back and forth action in the grains to end mostly lower, but a lot of it looked like some squaring up ahead of the USDA reports today.
Yeah, I do think it's just squaring up, getting ahead of the report. The funds have put on quite a bit of long positions here in the last couple of weeks in anticipation that maybe we have some crop problems developing down in Argentina. So we had a sell-off. We brought the beans back again, put a little bit more premium back in, weather premium back into the market. Numbers tomorrow, I think it's just going to be important. I think you've got to, I don't expect it to be much that's going to change the market. I just think you got to avoid a couple of things. One is if you want something on the friendly side, I think an Argentine bean crop has to come to 40 million metric tons or lower. And on the corn, I think you want to stay away from a corn carryout in this country that hits 1.3 billion bushels or more.
Yeah, and South American numbers, like you say, are going to be pretty important. But let's talk about soybeans on Tuesday. Pullback, but meal was the big pullback. And was that just some meal oil spread unwinding?
Yeah, I think you've had a combination. The meal, of course, has had a pretty good move to the upside. We're at contract highs. You're starting to get into the South American harvest, so you start putting some beans into the world market, and you'll do that on the crush. Argentine crush is very slow right now, not going to pick up that I see anytime soon. But the oil, today you had the bounce back. You had the combination of the energy prices surging here today in this country. That was good to see. You also had Indonesia, I believe, reduce the palm oil usage for fuel in their country, and that put a spark in the palm oil market here for the last couple of days. And that's one of the reasons why all of a sudden you caught bean oil on a pretty good setback, and you're seeing an unwinding of that spread back, buying the oil, selling the meal.
And then cattle setting back here, but after a new contract high, some profit taking certainly was to be expected, I would think.
Yeah, I think obviously you got to have some type of a pullback in here. I mean, we got June cattle futures came within now $1.20, $1.30 of all-time record highs. So
Right.
you were probably destined to get something that pulls back. But if you really look at the overall fundamentals, this market still looks awfully, awfully good, and it's still very orderly. I mean, if you're up at these prices and worried about prices that were peaking out, I don't think you're going to peak out the cattle market by being 50 cents higher and then close 50 lower. I don't think that's going to be the case. I think you're going to eventually get to something where it's almost a limit move or get into limit moves before we find some type of a top.
Sounds good. Mark Schultz, North Star Commodity. More Ag Day coming up.
Your next piece of equipment is on MachineryPete.com. Search equipment from dealerships across the country to find what you're looking for. Only on MachineryPete.com.
Meteorologist Andrew Whitmire joining us here, taking a look at our national forecast and really focused in on wind. I mean, this is kind of a wild map, but 40-plus mile-per-hour winds.
Yeah, we don't see that too often here across the parts of the Great Lakes, upper Midwestern states. We are going to be looking here at the potential of around 40 to 50 mile-an-hour wind gust here as we head throughout to Thursday as a slow-moving low-pressure system moves on through, and that's going to bring in pockets of heavy rainfall for parts of this region as well. And as we kind of zoom on in this wind gust forecast, let's go ahead and put it into motion here. It's going to develop down across parts of the deep south as this low pressure system continues to kind of strengthen and work its way northward here throughout the day for this Wednesday. And by tomorrow morning for a Thursday morning, we're going to be watching these purple shaded areas kind of showing on up here, and that's going to be an indication here of some wind gusts that are going to be in excess of 40 miles an hour across the parts of the Great Lakes states. And eventually we'll even see some of that wind tapping on into the northeast as well, where we could get some wind gusts at times up around even 20 to 30 miles an hour as we close out this week. Let's take a closer look at the system here as we look at the future radar throughout Wednesday morning. We'll be watching ongoing showers and thunderstorms down across to eastern Texas, all the way up towards the Ozarks. And again, the Ozarks area, that's where we have to watch out for the potential here of some localized areas that could be picking up anywhere from 2 to 4 inches of water. Where we have the cold front on the south side of the low, that's going to interact with some moist to warm air down across parts of the deep south, and that's going to give way to ongoing severe weather. And as this low pressure system tracks its way further towards the north and east, again, that'll carry the wind with it. And we'll be watching some heavier pockets of rain up across the parts of the Great Lakes states, and even a thin, shallow layer there on the back side of that low on the leftward side there. We're going to have to be watching out for the potential for a few inches of snowfall accumulation. Here's a look at rainfall here as we go throughout this system. Again, where you see these yellows, that's an indication of where we could be watching some pockets of 1-inch rainfall. Temperatures today across the country for this afternoon. It's going to be another warm day here. It's going to resemble more like early March compared to February 8th across the country. That's a look across the nation. Now let's take a look here at Ag Day Select Cities. Moses, Alabama, showers and thunderstorms developing throughout the day, high nearing 80 degrees. Going over to Raymer, Colorado, breezy, chance of an overnight flurry, high 45 degrees. And going over to Wilbur, Washington, sunny, high 40 degrees.
Weed Warriors on Ag Day is brought to you by Fierce, a pre-emergence herbicide with 3 formulations. Learn more at valent.com/fierce. Always read and follow label instructions.
Weed control was a challenge in drought areas of the Western Corn Belt last season. So what does that mean for your weed management program this year? Well, in states like South Dakota, the drought hit the hardest late in the season. So weed scientists say farmers were able to get both pre and post-emergent herbicide products to activate. Most saw decent early weed control, so that isn't the key issue for the new growing season.
The biggest problem we're going to have is we got to be worried about carryover in those areas if they use products with long-term residual. And that's the first concern I have. As far as controlling the weeds, it's actually harder coming out of a real wet year where you have a lot of weeds there. This year we didn't see a lot of fields with extremely bad situations. And so I don't think that part is going to be the weed control isn't going to be the problem that carryover could be.
Now in other areas like western Nebraska where farmers were dry all season, there could be bigger problems, especially with resistant weeds. Agronomist Ben Sauter with Frenchman Valley Co-op says farmers lost 20 years of weed control last season and will have to work hard for the next several years to get weeds back under control. That's because plants like Palmer amaranth, without competition, could put on up to 1.3 million seeds, which could germinate this season. As farmers plan production this spring, who are they growing for? Very soon, it could be North Africa. We return to Morocco and what's next in developing this future market for soybean meal. Next.
In the Country on Ag Day is brought to you by Pivot Bio. What if you had the nitrogen you need already on seed? Pivot Bio is the first company to apply nitrogen on seed. The nitrogen you need, now on seed, from Pivot Bio. Learn more at pivotbio.com.
The soybean processing industry is expanding in the United States due to the push for green fuels like renewable diesel and sustainable aviation fuel made from soybean oil. Now, the result of the increased crush will be an excess of soybean meal. AgDay's Michelle Rook shows us how South Dakota soybean farmers are taking the lead in developing new meal markets as part of a recent trade mission to Morocco, Africa.
With the expansion of soybean processing in the United States, farmers are looking for a home for the extra meal, and they're finding it here in Morocco. Meal exports to Morocco are key, with soybean plants crushing for oil for renewable fuels, and South Dakota farmers are working to expand that market.
When you have a surplus, it will be a surplus of soybean meal because we're crushing for oil, you have to figure out a way to get rid of it.
And so coming here, having a presence gives us the opportunities to hopefully make some sales in the future.
Morocco is already one of the largest soybean meal customers for the U.S.
It's always in the top 10 of our soybean importers from U.S. It's usually around 400,000 tons.
And market share is about 60% and has been 60% during the last 5 or 6 years.
Moroccan feed customers like U.S. soybean meal because it's more consistent than South American product.
The soybean who comes from Argentina, sometimes they have some problem about cooking, about digestibility, so we prefer to work with U.S. soybean meal.
Morocco's largest feed mill, Al Shahel, produces 1.2 million metric tons of feed annually, with 70% used in poultry rations. They buy based on price and quality and prefer U.S. meal because of its nutritional value.
Even if the price of soybean meal of USA is high, it's better to use it because with amino acid that they have.
This represents a shift taking place in the global feed industry, and it's a big selling point for northern states like South Dakota that grow soybeans that are higher in essential amino acids.
In the past, protein has been the bar that everybody had set, but really proteins are made of amino acids, and there are specific amino acids that are important to livestock and to human development. And South Dakota, North Dakota, Iowa, and Nebraska have those.
Research shows essential amino acids are more digestible and help livestock and poultry gain more efficiently.
Extra protein just ends up being waste. So the amino acid profile is truly what they're seeking, and we offer some of the very best amino acid profiles that there are.
McCoo says they also watch the currency exchange and are relieved the U.S. dollars backed off 20-year highs to make imports more affordable. However, Babb says as the U.S. ramps up meal production, prices may be more attractive for countries like Morocco.
Larger production of meal will have a little bit lower price. You add in quality and sustainability. We've got to have a lot of good markets for that U.S. meal.
In Morocco, I'm Michelle Rook reporting for Ag Day.
All right, thanks, Michelle. Now you can watch all 3 parts of her Morocco series online over at agweb.com. And that's all the time we have this morning. We're sure glad you tuned in. From all of us here at Ag Day, I'm Quentin Griffiths. Have a great day.